TK, nothing happened this week, right?
No, this was an uneventful week in the Toronto real estate board, Canadian real
Uneventful.
estate channel,
I
economy.
don't know
Nothing.
what the hell we're going to talk about today. This is
Nothing
going to
happened.
be a dull episode for sure.
Oh, wait. They raised the overnight interest rate.
Oh,
Darryl.
I thought that was a dream. I was hoping that was a dream.
I thought that it was 50 basis points.
Oh, it's a nightmare. It's a nightmare.
But
50
the reason
you were betting on?
I just said that because I wanted to be different. If
What did I say?
I knew that 100 basis points was an option, I would have said 100 just because everyone was saying 75. I just wanted to be different.
What did I say? 75?
I'm not sure.
I
But
don't
let's say you
remember what
say
I
100.
said.
I'll back you up on that.
I don't
You know
think
who
I
said
said
100?
100.
You know who said 100?
Mike?
Frank.
Frank?
Frank said 100. Yeah.
No way. When? When?
Like
though?
way before and like the day before and like the whole like leading up to it. He kept on saying 100.
Yeah, I saw a
Yeah.
couple people talking about 100 like the day before, maybe 2 days before, but I was like,
Yeah.
whatever.
No, he was
this is
saying
just
it-
headlines.
He was saying it more. He does have a, major in economics. So maybe he knows a few things.
In my experience, that would actually mean the opposite. But hang on a sec. We have a brilliant guy ready to rock and roll and join us on the show.
Love it. Let's do
Ready?
it.
Are you ready?
Okay.
Here we
I'm
go.
always ready.
Here we go.
Plug her in.
Can you hear me? Can you hear me?
Now I can hear you.
Before we start.
You were
Before
mouthing
we
it.
start. Before we start.
Let me hear. So excited. I'm so excited.
It
And you know who
is.
should be really excited? The listeners.
They should be.
We have scoured the planet for real estate technology, and we are bringing the real estate tech to this podcast for our listeners so they don't have to go and waste their money on a bunch of stuff that they don't need. Excited to learn more about it. Yeah.
All right. Ready?
I'm born ready.
Born ready. TK.
Yeah, if
So
you're
what are we
listening right
doing
now,
here?
you should be liking and commenting and subscribing. So if you haven't liked, just do a little like. If you haven't commented before, now is a good chance to comment. If you're not subscribed, you need to ask yourself, why are you not subscribed? And if you are subscribed and you haven't hit the bell, why not?
What the hell?
What is
You
going
know how
on?
many people are subscribed and haven't hit the bell? It's absolutely shocking. Welcome to the show. Here we go. You want to introduce
Habistat.
yourself?
Yeah, my name's Jeff from a company called the Habistat. We've been around for about 2 years. Kind of started as a pandemic project. We were kind of all locked up, and we started looking at homes. It was kind of the time where we were starting to look for something to buy. I realized it's just so hard to get good information out there, and that's kind of where this thing started. I have a data analytics background. Started posting some charts on Reddit. A lot of people were liking it, and eventually transformed into this. So,
Oh, wow. Cool.
It's been a fun journey. I got to meet a lot of interesting people in the business, and looking forward to meeting you too.
That's great.
Yeah, this is great. I'm a big fan of your charts for sure, and I've seen quite a bit of your work actually, and I know that your product is far superior to most. That's for damn sure. I see a lot of people using it and quoting it in their videos as well.
Yeah,
Yeah, it gets referenced a lot.
That's
it
awesome
gets
to hear.
referenced a lot. Yeah, you're making waves, man, and that's so great. That's like a nice little from the ashes of the pandemic kind of story, right?
Yeah, I had to do something to keep busy.
Well, welcome to the pandemic, glory story show, because that's exactly where we come from. I mean, I'm in real estate, I sell real estate. So potential client over here, and Darryl just fights trolls on Twitter all day long. And, we're really just, chatting with people in the real estate industry. We've had like a lot of different guests come on. We want to know like all about like your system. So I'm hoping that we can give you a little bit of a plug today too, because we have a lot of realtor listeners. And then just get your take on things. I mean, you're looking at the stats and the hard data, and we want to kind of get your views and opinions as well. So,
Completely looking forward to it.
Yeah, and especially now with what just happened this last week. I mean, so have we?
Does that show?
Well, there's no way it's going to show yet, but that's what I want to know is like the last couple of increases. Are they even showing yet?
I mean, to an extent. I mean, can I share my screen here?
If you can't, I will open that up.
Oh. All right, so we've got a couple of things pulled up. We can work through it, but you asked about the last couple of increases, and what this chart is showing is the month over month change. So oftentimes you'll hear kind of the year over year quoted in a lot of articles, right? And it's still saying, prices are up 20% in different cities. That's still a useful metric, but I also like to track.
It's useless. We've been saying since the beginning of our show, like anything but month over month is absolutely ridiculous, like ridiculous.
Right. And yeah, so what you'll see here, obviously something looks pretty different here, right?
This episode is brought to you by Landlord.
This Landlord software is a game changer. You upload your properties, right? You'll upload all the information, income, expenses, timelines, mortgage details, everything that you need to have so that you can keep track of everything in your portfolio. And as you go through real-time adjustments in, rent increases and water bills and tax bills and everything else, they're going to actually give you recommendations on how to make your portfolio more efficient. And it just breaks everything down for me in a way that I've never seen before. Like Excel spreadsheets just don't cut it. I don't think there's a better program or app out there for investors, and it's free.
Please click the link below for your free trial offer. Anything but month over month is absolutely ridiculous, like ridiculous.
Right. And yeah, so what you'll see here, obviously something looks pretty different here, right? We're looking at June 2022 here. And, since the CREA's benchmark price have been released since January 2005, this is like the most significant month over month drop since, the metric started.
This is in prices. Okay.
Canada, all home types.
Yeah.
So what are you guys tracking? So I guess just because we're in the bubble of the GTA, real estate world, you're tracking, is it provincial? Is it just across
says Canada there?
I know that, but I mean, what are you tracking overall on your site?
Yeah, so on our website, we have a lot of information available for free. Originally, the start of the project, we didn't have any product that we were selling. We have a few dozen, I think, charts on there to just stay informed in terms of real estate prices, incomes, rent levels, etc.
National.
Yeah, nationally.
Okay.
So if I just scroll up here, I can look at the location list here. I think there's about 60 locations that CREA publishes every month. So I actually just shared this yesterday. Comes out every month on the 15th. You can see covers most provinces. I think, even Quebec, where it's often hard to get real estate data, there is some on here.
Because it's in French, right? That's why.
Could be.
Right? Their numbers are, the reverse, right? So 36 is 63, and that's why it becomes a little bit more difficult to read. So this is just CREA. This is just you pulling the information from CREA.
Yeah, so this is all publicly available data here. Covers a number of locations, home types, and what we try to do is kind of on the right side lay out, one of the main questions someone might want to be asking about, real estate data in various cities. So, what are the long-term price trends? How quickly are prices changing? Et cetera. Just comparing different cities, home types, et cetera.
So if you're a buyer or seller and you're thinking, hey, I need to know what's going on in the market. I want to see where we're coming from, where we are today, and where potentially we're going. This is a good place to start.
But you have to be an agent, don't you? Have to.
This is the free. This is the free one, right?
Yeah, this is completely free. So maybe if I just go back here to analytics.
It's all public info, right? So people can just go on there, get it.
Yeah.
So if they see this huge spike and they're like, okay, you know what? I'm buying now, and it was always here, and all of a sudden I'm buying at this point. Maybe I should be careful. Or I see this drastic, reversal. It's like, well, maybe there's a good opportunity for me to get in and take advantage of the situation, right?
Yeah, exactly.
High level stuff.
Here, no signups or login needed. You click this, you can see different tools for home prices, income, rent. Also some planning tools, which are kind of interesting. So These are a couple that I like a lot where you can actually look at how long will it take you to save for a down payment. So you're putting in, like, what is your income?
I never like that
You're
those
not gonna
numbers,
like the
right?
answer
It's
on
gonna
this
take
one.
47 years for you to buy a house in Toronto. It's like
Make
47
more
years.
money.
What do you mean
Make
I gotta
more
wait
money.
47 years?
Rob a
Right?
bank.
Won't the 20% down in 47 years be so far out of reach? It's like an infinite number, the answer.
Right.
Right.
Yeah.
But this is used. I know why you have this, because this
Can
is
we go
actually
back to
a
that
metric
chart that you had up there?
that people use.
Go back to
Yeah.
that chart you had up there, the month over month price increase.
Yeah.
Is that what's showing us? Where does that end? Is that showing us that rates have had an effect, or was it showing us that things were already shifting before rates changed or
No,
started to
even
change?
even the peak was kind of in February, right? So if we go back to this one, how quickly the price is changing, you can see, back in, I guess, January here, prices increased 5.4% on a month over month basis. In March, still positive changes, right? It wasn't until April that, we saw like a modest decline in prices. And now, the decline has been getting steeper each month. So down, 1.5 in April, down 2% in May, down 3.5 in June.
Month over month, those are
So these are
big numbers.
Just to break this down, because there's going to be people who are looking at this and saying, what does this all mean? Yeah. Anytime that there's a month over month change, I mean, generally speaking, it would be near zero, right? I mean, it would be point something, right? Each month generally. And of course, in the last little while, it's been positive 0.369, whatever it is, right? So now we started to see some spiking earlier, or in the last 2 years, we saw some significant growth some months. And now what we've seen is the largest decline month over month. And Canada is at 3 point something percent month over month decline, which is what the alarming number is, because that's a big number that we've never seen before since this has been keeping track.
Well, and if you make it on a yearly projection, what does that turn into? 36% or something?
Yeah, exactly. Because of how it compounds. Yeah.
But I've never seen an annualized month over month ever pan out. Right?
No, look at how much volatility there is each month.
I remember when in January to February, I think it was like a 9% month over month growth in the GTA, something, roughly. And then it was like annualized, we're going to be double in the next year. Something's wrong. I was like, something's up, right? I was like sending emails to people. I'm like, guys, there's something that's going to go down, because how are we going to double in a year from here at this rate? Like, this is like alarming figures. So it is a good metric to understand month over month to really sort of predict what's going to happen in the future, right? It gives you a really good
it gives you an idea of what direction things are going, right? I mean, it builds a trend, not like versus last year. Like,
here's my thoughts though.
Was there a pandemic last year every year? Was there a war last year every year? Like, there's so many things different from year to year.
But tell me if I'm wrong here. Okay. So if you saw a small percentage increase, right, then each month, right? So it's bouncing between 0 and 2% each month. Would you say that would be a more sustainable growth compared to a major increase 1 month? You'd say, whoa, that's not sustainable. We're probably going to see things level off soon. Now, in the inverse, if you saw negative 0 to 2% declines every month, you'd say, okay, this is going to be a sustainable decline. But because we saw this massive decline, are you thinking maybe we're through the worst of it? What does that tell you? Like, I want to hear from you.
Yeah, I think like anytime you see constantly every month, 1% increase, 2%, anywhere in that range, that adds up very quickly, right? And so it wasn't necessarily that, say, from February to March, we were seeing, massive climbs, but it's the fact that it's happening over and over again on a consistent basis every month. And I think looking back for the past like 24 months, there was hardly any correction whatsoever. I think like the lowest one was less than 1%, and then right back up again, up into the right. So I think when you see that continued growth, and you kind of like stack it all up, it adds up to, just a massive price increase that, shouldn't happen in a short amount of time. And that kind of tells you, if you've already seen that growth, you're probably not going to see it going forward, right?
But now the inverse, if we've already seen that contract.
You mean kind of like from February till now?
Yeah. So
Or-
month over
yeah.
month, from May to June, we just had the largest decline month over month, right?
Yeah.
So now would you suspect that, it's hard to sustain that massive declining market from here on out because of that? Or is that not
Well-
something you would infer?
Well, let me, we saw the largest month over month decline since this was tracked, but what does that actually look like? Is this, fairly small blip when you really zoom out and look at things, right?
Mhm.
We're heading back towards the long-term trend line. But
Mhm.
if we look, let's say pre-pandemic, end of 2019 here, we're still hundreds of thousands above that, right? So
Pre-pandemic, yeah.
yeah. So
we spend more time under the trend line than above it looks like.
yeah, I mean, you're going to see those swings.
Well, because the trend right now is a lot higher because of where we're at right now, Darryl.
Right.
Yeah,
Right.
So if we were to continue along the same trend line, this ends up around just over 600K or so, and the June national prices were over 800,000. So I would argue there's so many factors that impacted as well. Like if we were just following the trend, we wouldn't have seen the massive climb. There's just so many socioeconomic factors that could drive things one way or another. So I find it hard. The data is useful to understand what's happened and what might happen, but government intervention, things happening in other places in the world, all these have an impact on real estate prices.
Well, I think that there's a reason why people read charts. There's a reason why people use data. And I agree that, you may not have this crystal clear vision on where things are going, but the fundamentals seem to always play out. It's just the timeline is never certain. Right?
Exactly. Yeah.
So that trend line, like we're going to get back on track with that trend line. I'm not sure if it's going to be in the next 12 months or 10 years, but eventually we'll look at a chart that will say, yeah, that makes sense. Cause you can see where 2017 is, where we were experiencing the same thing. And at that time, Darryl, we would have all said, we're never going to hit that trend line. And then sure enough, by 2019, we're below it. Right. So like we're already back on track again. Right. So
yeah, that makes sense. Cool.
All right.
Well,
that's a good tool. So again, just, I want to hype you up here. Right. So this is just like the free stuff. You guys have taken it. It's from Korea.
Yeah.
It's definitely, public information. To me, this already seems way easier to read than the Korea website, because you got to go through like 7,000 pages to be able to get all this data, right? Like to get each one of those points.
Yeah. If you want to do, any more in-depth analysis besides kind of seeing what was the trend line, then, you have to know Excel pretty well, be willing to commit a few hours to sorting through the data.
Nobody's willing to do that. No, nobody's willing to do that. It's why you have a business right now. Right.
Yeah, exactly.
Because we had a guy, just so we had a guy on our team who is, stats guy. And I think you're either a stats guy or you're not. I don't think you can practice it or train it. It's either you like doing it or you don't, but I could be wrong. I'm wrong about a lot of stuff, most stuff. And he moved though. He's moving to New Brunswick. Go figure, right? You watch one of our podcasts, Darryl, and now he's taken off and he's moving to New Brunswick. But now we don't have that ability to have those stats, and he would track it every single month and he would just keep on top of it, because you know who sucks at statistics, and we can say this here. You're okay to say this. The Toronto Real Estate Board. Okay. You're okay. You're allowed to, you can agree. You don't have to say anything. You can just nod and smile, because you're knocking them out of the park by the amount of data that you're keeping track with that they aren't.
Right. Yeah. And maybe, that's a good segue into the Toronto specific platform we have, right? So this is kind of our paid version. A couple of things I pulled up for you guys here. Thought you might find interesting. Obviously, this is going to be a lot more in depth. There's a couple dozen, maybe a few dozen tools in here. And, one thing that's been making the headlines quite a bit is, home sells, hundreds of thousands over the asking price. It seems like everything, every listing has like 30 offers. Things are just crazy, right? What this is kind of showing here is a pretty, clear trend line down to the right? So what we're seeing is a percentage of sales above the asking price. in the peak, that was around 88% or so. Now in the Greater Toronto area, we're looking at, less than 40% of sales going above the asking price. And so that's just a huge shift in, what we've seen the market do in the past couple of years.
You know what I would love for someone to do? Maybe you're the guy who can do it. Forget about over asking or under asking.
Mhm.
Is there a way to figure out like over actual reasonable value based on like current comps or under, you know what I mean? Like who the hell cares what the asking price was? Everybody knows it was a bunch of horse shit, right?
Yeah.
You'd have to build an algorithm though to come up with that number first, and then
but that House Sigma comes up with a value
percentage over House Sigma valuation. That could be the stat.
It's a good idea.
But everybody's buying that stat from House Sigma, even though everybody knows it's kind of wrong, right? Mm-hmm. Somebody has to be able to make one that's at least as wrong as theirs that we can rely on, so that we have a real stat. Because this is a wonderful chart, but the reality is it doesn't mean anything, because the asking is like this, throw a dart at the wall.
Remember, you got to think like a real estate agent. We would just create an algorithm that said the values,
the price is going up,
selling are lower than they actually are. So after we sold it, we'd say we beat the algorithm by 10%, and everyone would go, oh yeah, like it's impossible. It's impossible.
It's tricky. A lot of people tried it, and what's the company in the US that kind of saw that really, Zillow.
Hold on a second,
completely backfire, right?
But every realtor with a press of a few buttons is able to come up with, what do you guys call them? Your analyses of the comps.
CMA?
Your CMAs, your extraordinarily unbiased and unskewed CMAs that you give out to people, right? Like you guys can put those together. Some computer has to be able to go like, okay, the next 2 streets over. Okay, if there's nothing there, the next 3 streets over. Like something within this radius to make up some kind of a estimated reasonable value based on the last 30 days or something like that. I mean, that's even what I was saying before, is the appraisers should actually be able to tell you what the value really should be, not what the purchase price was.
What about, right? Like
these are different things, aren't they?
What about over sellers' expectations? So then you got the sellers to be happier.
Oh, come on, that can't be manipulated at all.
Well, I think they're all the same, right? Because remember what Skrinko was saying? He was trying to build one for one building, trying to build an algorithm for one building, and then it was like, what elevation, exposure,
right,
what renovations do they have, what kind of countertop? Like it was just too finicky. And then the resale housing, you're going to be out to lunch. But this metric here,
but this is an indicator of sentiment in the market.
Exactly. This is not anything to rely on values. It's just like, I'm going into this situation and it tells me that nobody's paying over asking right now. And there's 3 offers. Do I offer 100 grand over asking, or do I just give them their asking price because I really love the property? And it can help people make a decision.
So hold on. So this is telling us about 37% of listings currently in Toronto are going
the transaction type
in the Toronto area.
All transactions, all like condos and housing.
GTA.
Yeah, the whole GTA.
38% are still going above asking price.
Yeah, so, I know. Let me just zoom into maybe. So we got like Durham here.
Durham is Durham getting pounded right now?
I sold one over asking, $5,000 over asking, Darryl.
Yeah, and I'm sure your strategy was the same as 6 months ago.
I put a sold over asking sign anyways.
Did you price it the same way you would have 6 months ago?
Did I price it the same way?
Yes.
No, not a chance. Actually, I did, but it only sold 5,000 over asking instead of 300.
But you listed it at the same price you would have listed it at 6 months ago?
Yeah.
Wow. Look at you. So full of integrity, TK. It's amazing. It's amazing. Okay, what just happened here? You were moving things on the fly and everything.
Yeah, so I was
sales volume over under asking. Here. Now we're going into the.
We're looking at Halton here.
Halton, all right.
And so July is only halfway done, but we can see less than 20%. 17% of sales going above the ask price.
No one wants to live in Halton. Yeah.
It's not even that. I'm shocked that even that many people will pay over asking in that area right now.
some listings that are fairly priced, right? Like every kind of agent has their own strategy. So I think it's not necessarily, a bad thing. I think overall we probably want to settle
Just
maybe around the 20%, 30% mark.
just to clarify something here too, because this is actually really important. It's not 20% of listings that sold over asking, Daryl. It's 20% of sales.
Sales, yes.
Because 90% of listings didn't sell.
Right.
So out of the 10% that actually sold, 20% of them went over asking.
Look at all the under asking. Like, look at these shifts.
Yeah, exactly. Just a massive shift in sentiment, right? And that's why we've seen such a steep decline in prices so quickly. This is also what can drive up prices so quickly, right? It's going to be sentiment rather than real economic factors that causes those massive swings.
That's what I was just thinking. I mean, the way up, everybody I talk to wants to buy something right now. Like TK, don't you just have, we've talked about it with everybody. Like everybody we talk to has investors, clients, like everybody's just kind of sitting around going like, please just tell me to buy. Tell me it's a good time to buy right now. Don't let me be an idiot by buying right now, but I have money and I want to buy right now. Right. But like, so can sentiment just boom, springboard back up again?
Yeah, I would say so.
Of course.
Especially it's tricky. Like I was chatting with Daniel Foch about, what are the bull cases and bear cases that are left right now. On the bull side, we're still probably underbuilding quite a bit. We have, still a lot of local, provincial restrictions, and I'll flip to another article here. So things like this shouldn't make the news, right? 260 new units in Toronto. We need a much more larger action than this, right? To make a big impact on the housing
rapid housing initiative.
What a great
rapid housing. 6 years later, we got 260 affordable units that will they're one bedrooms for $1,950 a month.
Yeah,
20% under market.
So I feel like the bull case is that the government is probably not taking this seriously yet, and with low supply, like we're not seeing a lot of new listings yet. Demand has come down quite a bit, but we're still not necessarily at a balanced market until listings start increasing. Or
let's talk about that. I want to hear your thoughts on that, like because it's hard because people cancel relist and all that kind of stuff. So how do we know like the volume of new sellers coming to the market as opposed to just, people constantly relisting the property 8 times because they don't know how to price it?
Yeah, that's actually something that we've gotten requests on a few times now. Some of the works on our platform, but it's not live yet.
No, yeah, it's hard to track property because they do property days on market and then they do the listing days on market. Yeah. So like, how do they do that? How do they know that one property's been for sale for 90 days, but this new listing's only at 15, but not eliminate all those other listings from the count for new listings? Do you know my question?
Yeah. It would kind of be looking at the actual address ID rather than a listing, and just kind of say, okay, if you have one address and in the past year it's shown up 5 times different listing IDs, kind of looking at the original, like the very first start date compared to when it came off the market. And so it's actually not that hard. We just need to invest the time in it, I think.
Didn't you see though that there were some realtors that were kind of dodging? Do you know where it shows you the last time it was listed and terminated, like the history? Yeah. So some agents were putting like avenue instead of road, or putting a period in between.
I never heard of that. That's so sneaky.
Right. And so it wasn't showing that it was terminated 2-3 times. Somebody on Twitter found all the,
That's like professional standards misconduct. Like you should get fined for that. If I were to list a property at $1 million, then I drop it down to 900, then I drop it down to 800 and it sells for 850, I wouldn't put the sold over asking sign. All right. I would just be like, sold, get it done, move on with life. Right. But that's sneaky, Daryl. That's really
right.
And that makes it all much harder to track. Right.
Yeah.
But yeah, we'll see if we can figure something out for that. And
that's like part of your nightmares.
Are people just constantly like custom ordering ideas like from you?
Yeah, they are, which is a good thing. I mean, we
It's
want to
good,
improve the
right?
product, and believe me, we've been chatting with a couple of boards as well. Because right now we're really focused on the Greater Toronto area, and we want to get this thing across Canada. Right now, like the public data from Korea is fairly limited. We can see general stats for a city or property type, but don't have the details, right? And to me, every realtor should be armed with the information to
This should be part of your board. Like, I
yeah,
can't speak for other boards because I know their fees are a lot lower, but if you're part of the Toronto Real Estate Board, they should be paying the Habistat a monthly rate for every single member, so that when you log in, you have the ability to go and search all the data, because
right.
what they provide us is very, very, very high level basic stuff that is not clear cut. And there's just so many neighborhoods in Toronto. You need to have more information to be able to help you and your clients. And like, we
Yeah,
have the funds to do it. So I don't understand, why. I guess that's Jason Mercer you got to talk to. He's the one you got to
yeah.
lobby.
No, things are slowly in progress, but we'll see.
Yeah, get
Oh,
there.
that's
Yeah.
good. That's good.
Yeah.
Let's talk about this big rate increase. Like what's your background? Like, are you an economist? Are you
I'm not, no.
are you a
So
realtor? How did you get into this whole thing? And like, what do you think about what's going on right now?
yeah, so I mean, I think that's good to caveat that I'm not an economist. I started off as an
Oh, good.
accountant.
Now we can trust you.
Yeah, exactly. Started off as an accountant, got my CPA, shifted into the data analytics space where I've been for the past several years. And then only recently, when I was personally starting to look for a home, did I really get into real estate. So that was probably 4 years ago. And have been pretty passionate about it since. Just there's so much to learn, and before you really dig into it, it's kind of like it seems like it's something that just always goes up, and you don't really understand the rationale why that's happening. And it's something where you can just constantly learn. I found it pretty fascinating topic.
And are you able to kind of read into these numbers? Like, were you able to see this coming? Were you telling people like for years, "Hey guys, like, I don't think this is good for anybody."
Yeah. So let me show you something I find pretty funny. Not funny, but interesting. Go back here. So on this page, it's kind of looking at, it's a simple tool. You're putting in what is the current level of income, current home prices, and growth rates for the future. So what we're doing is kind of like projecting, not doing a forecast, but kind of projecting, what would home prices and incomes look if, the given trend were to continue.
So what does this tell you where you can enter the market, hopefully one day?
I mean, if we put the current home prices of 810,000 from June, and in the past couple of years we've seen an average of 7% growth, right? Let's say average household income of 80K, and that's been growing at about 2 to 3%. If we look out, say like 10 years from now, that's a $1.6 million home, projected income of 107,000, home price to income ratio of 15. If we go 25 years, we're talking about the average home price of 4.3 million, average income of 167,000. And so it kind of tells you these trends that we've been seeing cannot continue, right?
Cannot continue under the current kind of conditions, right? Under the current system. So this is great. So this kind of brings up another thing that a lot of people are talking about. And I think it's a bullish case for the market that could create a floor is all these iBuying platforms and all of these algorithms and all of these big businesses with hordes of cash that are waiting on the sidelines. With all these data analytics and all these kind of forecasting tools, you kind of see the necessity for these companies to start eating up the houses so people can afford to rent them, because who the hell is going to be able to afford to buy them?
Right. Yeah. No, that makes sense. It's really, the forecasting business is tough.
It's
I
a
think,
weird economy right now, because right now everybody's kind of like reshoring and onshoring their manufacturing, but they're offshoring their service labor, right? And their IT labor and all of their, the coding labor and those kind of things, right? So
yeah,
we're trying to find cheaper labor on the internet while we're bringing manufacturing kind of back home because we can't rely on these chains. Meanwhile, like, what's that going to do to incomes? That's going to probably lower average income, right? While houses are somehow still going up because, like, what is everybody just going to like let that price go simultaneously?
yeah.
TK.
I was listening to your last episode this morning, actually, before the show, and you're bringing up deflation, right, as a concern, and that's kind of the boat that I'm in as well. I'm seeing it all over the place, even high skilled jobs where, due to technology advances, it's difficult to justify, even current wages going forward. We're seeing, a lot of jobs being replaced by automation.
Right.
And people are committing to like these 25-year mortgages, right? And it's hard to say, what does the labor market look like even in 10 years from now, 15 years?
Yeah, and we haven't even seen automation even take hold yet. We've seen like
Yeah.
2 or 3 companies that are really, using it to its current full potential and pushing it even further. But like, wait till autonomous trucks are really like on every road everywhere. That's gonna
Yeah.
just wait till. I mean, there's only a few ways to make these houses cheaper, and it's going to be through this kind of automation and robotics and AI and those kind of things. So there goes a whole bunch of construction jobs, and you got mining jobs. These dangerous mining jobs are going to start getting replaced by robotics, and
Yeah.
it's like how the hell? So what's going to be as rates are going up? Like, this is a crazy spiral we're heading into.
Well, in Japan and other places where deflation was an issue, deflation is like inflation. It's self-fulfilling. So as my income is not increasing, and I notice that the price of, my groceries or, the materials or housing or whatever it is starts to go down, now I'm looking for deals everywhere else. I want to pay less everywhere else. If someone says to me, I got to pay more, I say, no, right now things are going down. Just like now everyone says, we got to pay more for gas. Okay. You got to pay more for growth. Okay. Because everybody's on board, right? It becomes part of, the consensus. So when deflationary pressures come in, it becomes now in every area. It entrenches itself just like inflation would. And everybody then starts to say, well, I'm not going to pay more for housing. Are you crazy? And so interest rates and stuff like that I won't think will have as much of a bearing on that type of market.
Yeah, I
Right.
agree. That makes sense.
So there's less concern for interest rates, which everyone agrees. Interest rates should not be at 0, 1, 2. Like, it doesn't make sense. There's no economy that's ever said, well, this is a great idea.
No, but interest rates, home values, and wages are all so crazily out of touch with each other that
Yeah.
either wages have to fly way up quickly or house prices have to come way down quickly, or they're going to have to reverse rates because look at what's going on right now. I mean, God, another rate increase after this. I don't listen to most economists, but most economists will tell you that rates take like, I don't know, 12 to 18 to 24 months to like push their way through the economy, right? And so we're like a few months off of the first one. We just got hit with a fucking bazooka 2-3 days ago. And they're still telling us, hey guys, we're not done yet. Like, that was just a really big missile. We have an atom bomb ready to go in the back.
And I think, with these interest rate hikes, like, it's definitely cooled the market, right? Like all those charts we were just looking at, we're seeing, way far less homes go above the asking price. Prices are starting to trend downwards. But with 1%, you're going to need your home price to drop pretty significantly to offset, that increase in interest cost, right? And I don't think we're at that point yet. So it's potentially helped a bit in terms of, saving up for the down payment. Mm-hmm. But in terms of the actual carrying cost is, probably higher in a lot of circumstances. Yeah. Especially you're mentioning some like the smaller cities. say like the Prairie Cities, East Coast, where interest rates are not going to have a significant impact. Those cities are basically just going to see carrying costs increase. They're not going to see a decline in home prices, and they're just kind of no better off, right?
Yeah, it pushes affordability, down, and the same thing like I'm seeing right now too. Not any number. There's a few different ways to be able to look at it, but it's really easy to look at the cost of borrowing and prove that it's actually more expensive right now to wait. Because if your borrowing costs go up significantly and prices only come down so much, your monthly payment will be higher, right? And that's what the decision buyers have to make, because that's what you're doing. So again, and all the perma bears on the channel there, or the perma bears in the comments are all going to say like, we're pumping the market here, right? But at the end of the day, you got to look at it like that. It's like, yeah, maybe you can get $100,000 price drop if you wait a year. But
those guys all think you're supposed to just buy in cash. You're not supposed to lever up,
right? And
that's the whole theory.
That becomes the equation that everybody should be looking at right now. Is what rate do you have? First of all, like, do you have a fixed rate that's locked in still from a couple months back? Do you have what are your goals here, right? Based on how much your borrowing cost is going to be. So those are all the big questions you have to really look at individually.
Like I've been talking to so many people lately that locked into a 5-year or a 4-year, and they were upset about it. I'm one of them. I was like really pissed. Now I wish I locked in for longer, right? Because if I took a variable, I'd be higher than the lock-in rate that I'm at right now. And there's a lot of people like that, right?
I think this is an interesting one, and I think there's a lot of vulnerabilities in the Canadian housing market because of how we've structured our mortgages, right? Typically, I think still for the most part 5-year fixed, but then at the end of the 5 years you're renewing it, whatever that rate is. What are your thoughts on how it was done in the US, where the standard is basically the 30-year fixed,
the amortization period? Yeah,
that's what's going to happen here. Not only that, it's going to be interest only loans, because how the hell else? It'll be a combination of those two things. We'll start seeing like crazy amortization periods and or interest only loans. Right.
I think there's a reason why Canada will never do that. I think that there's the way that OSFI just regulates everything to be able to protect the banking system. I think the banking system is more important than the consumer to Canada, right? We're very protected of the big banks, right? We don't want them to ever take on something that they can't handle in the future, because it hurts the economy as a whole, right? So I don't see that coming.
I think though with the 30-year fix, that just significantly reduces the economic vulnerabilities, right?
Of the consumer.
Of the consumer, yes.
Mm-hmm.
Why not the bank? The bank borrows that money for 30 years at a fixed number as well. Yeah. It's a rolling, right? It's just constantly.
I don't understand every detail of how the bank is going to underwrite all these mortgages and where they're getting all their money from on their securities and everything. But I know that if rates are fluctuating, right, banks want to make sure that they're taking advantage of all those fluctuations and churning those profits as much as possible, because I think the US banks probably have 1,000 times more revenue streams than Canadian banks, right? So I think that it would be a way to protect the banking system. That's what my sense is.
I had a thought this morning where I was thinking like, so we have this thing they call a neutral rate, right? And it's this target where they're not stimulating the economy and they're not killing the economy, right? It's this target that they want to hit now that they've completely overstimulated the economy, that they need to kill the economy to get into. Why don't we stay in the neutral range always?
for that reason, right? They got to stimulate the economy. When the economy's not doing well, they say, "Oh, let's throw some fuel on the fire. Let's go."
All of the realtors say it doesn't matter. People gotta buy. People gotta move. Right?
It's not just about housing, though, Darryl.
No, but the interest rates are screwing up everything. Who's putting money into research and development now when your loan is all of a sudden 6% instead of 1%, right? Who's putting money into machinery and manufacturing right now and all these robotics when all of a sudden your pro forma just exploded with the cost of all of your inputs, right? Like who's starting a new business now when every cost is completely out of control and you don't know where it's going to stop? How do you budget? Why would you borrow money? And the cost of borrow, it's not just real estate, but real estate drives this mother like no other. Okay. Like this thing is leading the way no matter what. So good or bad, I think it's in everybody's best interest that rates are lower than like 6%.
Remember this, the same government who's like this. All right, let's stimulate the economy by giving everybody money and see what happens. Oh, all right. Everyone has too much money. Prices are too high. I know. Let's fix this. All right. Let's give them more money. We'll call it, we're fighting the inflation packages by giving them more money to see if this will help them. They're announcing yesterday about some sort of
the renters program where they're giving everybody $500 to
giving
basically give
money
to their landlord.
Yeah, like no, not that one. That one's part of it. But there's some other thing with carbon tax, right? They're giving back some money to provincial government. They're just announcing it yesterday, like $500 and like $360 for an individual, $180 for a spouse, $90 something for kids and all that stuff. Like they're just throwing around money like left, right, and center, right? They gave us back, Doug Ford gave us back the money for the license plates. Like they just keep on like putting money into this to say that people are struggling, which they are, and they need help, but they're fighting a fire by throwing more gasoline on it.
Kind of shows how immature, our systems are. And, maybe it's for political points. Maybe people don't have a good sense of what the next steps are. It's hard to say. And, it's just going to be tough to navigate out of this. We're in a really tricky situation here with the amount of debt that's been piled on the past couple of years.
Mm-hmm. I don't know what the answer is, but if we get reelected, we'll take the same amount of time not figuring it out next term. Yeah. Let's see what we can do to get reelected first. Okay, guys?
We're going to need another few years to not figure this out. Okay.
Yeah, definitely at least another few years, right? No one's figured this shit out.
I could run off that platform. I think I could win, right? Yeah. Status quo for everyone. Nothing will get done. I promise. I'll be the only honest politician of all time.
I was saying to someone yesterday, because we were talking about condo boards, and the only good people on condo boards are people who don't want to be on the condo board. And we said about politicians, the only good politicians are people who don't want to get into politics, because anybody who really does is not the right person. I said, it's a great campaign. I do not want to be premier. Right. That would be your best campaign.
Don't
right?
force
I have
me
no
to
interest in being the premier, but my name's on the sign. If you want to vote for me, it's fine.
So, but is there a point right now where people say, you know what, like I have to buy now? Like these prices, the price, like you're saying, TK, the price doesn't matter. My monthly payments are going fucking bananas here. Like, well, I don't know what to do. Or is this the time where people just go, you know what, fuck it, I'm a renter. I'm going to go put my money somewhere else and hopefully it grows enough to like compensate for not owning a home. Yeah.
So, I mean, if I just go back to one of these charts here, here's like the over under ask one, right? We're looking at sales. What we can do is actually look at leases for the Greater Toronto area. And we're seeing those just completely shoot up, right? So highest.
Sales volume over under ask. Oh my God.
But this is why I'm asking, like, are these purpose-built rental guys, or these guys who are wanting to eat up housing for the purpose of renting them out? Are they not looking at these metrics going like, holy shit, rents are up so much. Maybe they're going to compensate for the interest raise? Or have they not gone up enough?
Yeah, the multifamily guys are looking at that. I mean, at the end of the day,
aren't they sitting on cash going like, I don't even care about interest rates?
No. Anybody in the purpose-built rental or multifamily space is leveraging themselves for sure, right? 100%, right? But either way, the cap rates are going up right now.
It's crazy.
Cap rates are going up right now because of cost, because of the cost of borrowing. But the rents are going up, right? So your net income is going to be climbing for sure.
These are leases in these areas now?
Yeah, so we're seeing the lease price now. It took a dip for a while, but since I would say, mid 2021, leases basically across the Greater Toronto area have been climbing upwards. And this kind of gets to the problem, right? Like if so many people can't afford to buy, you're going to see people with fairly high incomes, they still can't buy. They're going to shift into the renters market, which is going to drive rent up for sure.
What do you think will happen in a recession?
But is that bad? Is that bad? It's not bad.
For rents to be high?
No, for more people to have to be renters.
I mean, I don't think renting is a bad thing. I lived in San Francisco for a few years, and the culture is quite different, where there's tons of purpose-built rentals. And, we had people on millions-dollar salaries living in rentals because that's the lifestyle they prefer, right? I don't think we build rentals in Canada anywhere close to what they do in the US, and at least in certain cities, right?
Mm-hmm.
So I think it's not necessarily bad to rent. I think it's more that people want to buy and they're forced into renting because it's not an option. I think that's kind of like that
Canadian
the gap to be closed.
Yeah, the Canadian take on it, right? Like in other parts of the world, renting. They're not ashamed of renting.
Exactly.
Like, sure, I rent, no problem. I can pick up and go whenever I want, right? They got other means of creating wealth, not just paying down my mortgage and hoping my property value goes up. I think that's why we're so attentive to real estate, is because everybody's all in on real estate, right? Everyone's just like, this is what I'm banking on, my rental properties, my principal residence. I need it to go up. Everyone's bullish. The only people who are like, bears are, for the most part, like the majority of them are not real estate owners, right? Or they're people who have just heavily invested in this dialogue of the market going down for so long that they refuse to give up because they've got too much pride on the line, right? Who else is a bear, Darryl? That
Everybody's
really
a bear right now.
Well, everybody who owns real estate right now is not hoping that it goes down. They're not cheering it on.
No, they're not hoping it does. That doesn't mean that you're hoping, because you're realistic.
But they're coming up with these ideas. They're like, no, we're gonna, the war is gonna be over soon, and immigration is gonna come up again, and the neighborhood that I live in is far superior than any other neighborhood in Toronto or Canada for that matter, and prices are only gonna climb up from here once this temporary phase is over, right? Like there's lots of people who are bullish. And if you talk to them long enough,
bullish for sure. I'm still
talk to them
bullish.
long enough, it'll come out in the conversation why prices will continue to rise.
I think that they will. I think that there's a ton of factors right now pushing up pricing currently. Like you just said, immigration alone is pushing it up. There's no way. I don't care what anybody fucking says anywhere. There is a supply problem as well as a demand problem. They're not stopping the demand problem, which means, guess what? The supply problem doesn't stop either. And on top of the supply problem naturally just not getting solved and getting further and further away, now the developers are stopping how many launches? 5,000 is what was in the news, which is definitely wrong. I have clients personally with more than that many units that all of a sudden don't care about getting their renderings anymore yesterday, right? They're not launching. And there's a lot of people that won't launch. And guess what? There's a lot of sites with permits that we're about to launch that may all of a sudden go up for sale, right? And have to wait another year to launch because the next guy wants to go tweak it so he could make what he just paid worthwhile. And we're going to see there's so much supply that won't go on the market. Developers, unless you already had a deal in the pipeline, like you're not buying anything right now. You're waiting to see what the hell's going on, at least for a few months. And that's going to slow down the development pipeline. So you've got just there alone, you have tons of pressure on pricing up, right?
And are you saying interest rates being like one of the main drivers of that?
No, that's a screw up. I mean, that's definitely currently going to be a downward pressure, but I think that's not like that. That's going to be transitory. No, that won't last very long because the market, look, the Toronto market, Vancouver market has proven time after time after time that it is resilient and it wants to go up, right? No matter what tax, no matter what policy we've put in, we trail back a little bit and then we go back up, right? very, very infrequently is it Canada's problem that we're dealing with in our real estate market. It's like these outside factors. Now, this time's a little different. And we're all, I mean, you guys are way younger than me, but we're all young. Nobody has a fucking clue what they're talking about because of this inflation component now. Nobody has a clue except for these old guys, but they're so out of touch with how the economy really works right now, I think, because it doesn't work like it used to work before. It's way faster. Things happen way quicker, right? Sentiment changes when a Facebook post goes out or a Twitter post goes out. So like, I don't even know what the hell I'm talking about anymore, but like, I just see like these pressures going in opposite directions that are huge, right?
Exactly.
That who the hell could know what's going to be in the next few months?
Yeah, that's the thing. I wouldn't trust necessarily any confidence in things are going up or down, just because, like you said, huge pressures on both sides, and there's I guess some of it is out of control, some of it can be controlled, and I've shared one chart on Twitter where just looking at I guess the Senate for Canada, and basically we're seeing, I think, close to like 75% is like owns property, another 30% owns rental property, right?
35, yeah.
Yeah, and so you're seeing, the people that can make big decisions, they have a personal interest in keeping prices high, and maybe they can see past that and do things that are right for the country, but
they're heavily invested in their principal residence.
It's difficult to do something detrimental to your own wealth, right?
Well, and that's it. Like, yeah, how many people with extraordinary amounts of wealth in real estate are pulling the strings with regards to the policy, right? Now, people kind of pretend that the Bank of Canada isn't kind of tied in. It's its separate kind of entity, and they don't care what everybody has to say, but I don't know. That doesn't really make sense to me. I mean, you're not going to kill your golden goose, are you?
Right.
You're going to bankrupt Canada to get inflation down? Like, how do we afford the payments? How does Canada afford the payments now that how did they afford it before when it was at 0.25%? Now, what is it? 2.5%? How do they do that?
Yeah.
They push it to a later date when money will be cheaper because of the same inflation that they're fighting, right? This debt will be paid off how many decades from now, right?
So, are we seeing inflation come down? Are we going to start seeing?
I think so. There's a lot of articles out right now where they're talking about it just based on energy costs, housing costs, construction materials. Like, there's already a ton of stuff that the data is showing a slowdown in inflation, but for it to hit that CPI, it takes like 6 months, right? So, and the markets right now, I think, are recognizing that in a lot of areas. They're saying, well, maybe we're over this, and maybe we're going to start to see this, even if the Fed or Bank of Canada just doesn't raise rates at all. One announcement, like one of their dates that they're announcing their decision, it's gonna like send this market up like so crazy. Like, if they just pause one time, everyone's gonna be just like making so many conclusions about like, we're back, baby, let's go.
It's gonna be dangerous though, but it's gonna be dangerous, and everybody is gonna be on board with that wave. Everybody's gonna be like, let's go, baby. Jump on. Let's go. We've been waiting for this for like 3 months. Let's go.
Yeah. I'll take 3 skids of it. That's it. They'll be ordering everything. So, I mean, we'll see what happens. I know that the economy is bigger than this show, even though this show is pretty big. The economy is bigger than this show. I think, the Habistat, like we didn't get to do a crazy amount of demo, but if you go on the Habistat website, Jeff, give a little shameless plug here.
Yeah. So, if you're a realtor in the GTA, just check out our website, www.habistat.com. There's a section in there for realtors specifically. You can watch a YouTube demo, which goes through a platform, see if it's something you're interested in. For any viewers of the show, if you sign up, we'll give you your first month free. Just write in the comments, Toronto Real Estate Show, and we'll get that credited to you.
Canadian Real Estate Show.
Sorry, Canadian Real Estate Show. And
either or.
Anyone else who's just interested in real estate and following these key metrics in the Canadian economy, just go check it out. Completely free, no login signups needed.
Awesome. Cool.
Definitely an amazing system and program.
Amazing
and
platform. Yeah.
Watch the YouTube video, see what you can do. You're not touching anything else, and bringing this to your clients, you're going to stand out ahead of the crowd. So huge tool. And yeah, we really appreciate it, Jeff.
Yeah. And now you can try it for free.
I'm looking forward to seeing the YouTube headline for this one. I know you. Who writes those? Is that you, Daryl?
Can you tell?
We have a ghostwriter. We have a ghostwriter in Bangladesh.
Yeah.
Sometimes he's not so sure about his English, but we love him anyways.
We got a copywriter.
Yes, there's a whole staff back here, but it's hard to keep good people.
Mm-hmm.
Yeah.
So we end up with me and TK more often than not. All right. Well, it was
Awesome.
great to meet you.
Show
Great
today.
talking to you. Thank you for all that wonderful insight. And hopefully we'll have you back, and some of those charts will be heading in a different direction the next time we talk to you.
For sure.
I guess it depends on your perspective, though. Yeah. Thanks so much.